All right, welcome back to Market Day Report. I'm Scott Shelody, otherwise known as the Cow Guy. Thanks for joining us. If you're just tuning in, and if you've been here all day, it's been worth it, I think, right? Let's take a look at what's happening in these markets. These markets are your money. Let's take a look at corn. That's going to be an important one. 3.5 cents lower in March corn today, 647.5. But we've had, what's that, a 14-cent range? Basically, May off 3 3/4 cents at 646 3/4. So corn, a little bit on its heels here today. How about soybeans? This has been a big range in soybeans, right? Look at that. We've had, what's that, a 48-cent range. We're off 21 cents, 15.62 even. That's not near the lows, though. I mean, we still are about 9 cents off the lows. How about, or actually 11 cents off the lows. How about May off 20.5 cents, 15.65 3/4. Let's take a quick look at new crop soybeans. What's going on with that NOV contract? See, got the front months off 20 some odd cents. This is only off 7 3/4 cents at 14.36 1/4. Keep an eye on that one for you as well. How about Chicago wheat? Let's see what's happening in Chicago wheat. That Chicago wheat market is down 7 1/4 cents. It's 7.90.5, 10 cents off the lows. May is off 7 1/4 cents as well at 7.96 3/4. Moving over to the hard red wheat in Kansas City, that's off a nickel, 5 cents lower. That March contract, 8.19 1/4. May's off 5 1/4 cents to 8.21 3/4. Okay, let's move over to spring wheat. What's happening in Minneapolis? Minneapolis, I used to live there. All right, March is up a half cent, 9.62 even. That's 10 cents off the lows, 9 cents off the, or 10 cents off the highs, 9 cents off the lows. So that's middle of the day's range. May is up a penny as well, 9.58.5. Then let's move over to the wheat or cotton. Cotton's taking on the chin a little bit today, 263 points lower, 122.65 is last in that March. Let's get to our next guest analyst. That's Todd Horwitz from Bubba Trading in Chicago. Todd, thanks for joining the show today. All right, what are your thoughts? I'm sure you've got a lot of them. These markets are all over the place.
Well, look at what I get for my Valentine's Day gift. I get the Cow Guy.
Yeah, that's exactly right.
Anyways, you know, there's a lot of stuff going on, but a lot of this is being Fed-driven, even into the grain market, Scott. You know, you had Barkin speak earlier. You got Bullard coming out, and they're whipping these markets around like crazy. And, you know, I think the grains look bullish. I mean, look, they were up last night. They sold off. They're trying to come back. And I think that you're going to see, I think they keep shaking out the weak hands, which are on the short side. And I think the bulls have full control. And I would expect to see much higher prices.
Yeah, I mean, we do have a lot of folks talking. And it's just funny because I say that when we see these ranges start to widen out, Todd, I mean, you can, argue against me if I'm wrong, but I feels like to me that a lot of times the market doesn't really know where to go, right? I mean, it's just all over the place. And that doesn't have to just be soybeans. It can be the equity market. I mean, right now we've got all three of those things that we trade. We got, the commodities, we've got interest rates, and we've got equities. Just kind of really not the rudderless, I would say, is the best way to say it.
I would agree with that. I mean, again, I think we have to remember that we're not looking at the markets tick by tick. We're not looking second by second, and we have to be patient. But the overall trends look to be much higher in the grains, and they look very strong. Every time they've tried to sell them in the last month or so, we come flying back and make higher highs, which is a very bullish sign to begin with.
Any comment about the Michigan Sentiment Survey last week, Friday, was bad? Are we starting to maybe see some pushback by the consumer here?
I think there's a lot of pushback by the consumer, Scott. I think right now the Fed is working with smoke and mirrors, and this is the problem that they create by not doing the job at the right time. Again, interest rates should have been raised 5, 6, 7, 8 years ago and started. We shouldn't be in this position now that now we have to fight against inflation because they will not turn on the fracking and the shale producing. So we're going to be stuck with higher interest rates, which makes everything all that much worse. And of course, you've got the things going on in Russia and Ukraine, which I think is a big nothing, but it does have some reaction to the markets. And I think those are the problems that we're looking at right now.
I agree. All right, stay right there. We're going to go away, pay some bills, and come back and talk livestock with Todd Horwitz from Bubba Trading after these messages. All right, welcome back to Market Day Report. I'm Scott Shelody, otherwise known as the Cow Guy. Thank you for tuning in. If you're just tuning in, every now and again I use that Cow Guy thing, right, as a cheap segue into these livestock markets, and let's use that right now. How about live cattle in Chicago? What do we have happening on that board? We're a bit better here today with that April market up 12 cents to 146.30. June's up 27 cents to 141.40. That's about 25 cents off the highs there, so we'll keep an eye on that one. But nice to see some up arrows finally after taking a look at a lot of down arrows on the grain side. All right, how about feeders? getting a little bit of a boost from a down corn board. How about March up 92 cents to 167.15? And again, that's about 70 cents off the highs. April up 72 cents to 171.42. Lastly, let's come in and take a look at the lean hog market. Feb's, let's see, no, April's up $1.15, 103.37. May's up $1.15 as well to 107.55, and those are about 25 cents off the highs. All right, let's bring back in Todd Horowitz from Bubba Trading in Chicago. What do you think about the livestock here, Todd?
I think they look great. I was shocked that we were lower this morning, and with good reason, I thought, and suddenly they turned around, and the next time I looked, they're nicely higher from where they were. And I think that, again, they look great. Hogs look the best, but cattle, both fats and feeders, are right at the upper end of their ranges looking to break out. And again, the only thing that can slow these markets down is the inflationary cycle and whether or not we can get delivery and get these things out. But overall, I think they look really strong, and I would look for higher prices.
PPI tomorrow, any concerns about what that might show?
You know what? I never get concerned about government numbers other than the reaction that the markets will have. We know it's going to be hot, and I think that the numbers are not right. Okay, they're not giving a full, accurate report of what's supposed to be happening. And I think the consumer and I think people really know what's happening. They can feel it in their budgets and in their bankroll. And I think that, the number itself, it may cause some reaction to markets, but overall, I think it's a big nothing because we already know. It's like everybody can feel the pain that we're feeling when you fill up your gas tank every other day.
Right, you go fill up your gas tank and then take the family out for breakfast. You need to see a finance manager to pay that bill. It's getting so bad now, and it's across the board.
You need a dollar menu somewhere.
Well, and the problem is that I mean, with food and fuel, that's such a large part of that inflation thing with the Fed. Look, we've got crude oil basically a little bit around unchanged today, but if that continues to march higher, I mean, we're in the low 90s. I mean, what's that going to do to those future rate hikes? I don't know. It might cancel them out. All right. I really appreciate being on the show. That's Todd Horowitz from Bubba Trading in Chicago. Bring it back to Nashville so I can throw this over to Janet.